Okay, we are back once again. We are back again. Okay, I think the first thing we can do at the beginning of the session, we can just simple take question. Okay, if you are maybe on a trade, maybe we can analyze that pair that you're holding, or maybe if you've got a signal that you've been watching, maybe we can start off by doing that in this second session. Okay. Yeah, I'm just gonna wait for questions on the chat box. But maybe the question can be about the cash flow quadrant, before we jump into about signals, because the goal that we have, or the goal that I have is uh okay, yeah, the goal that I have is for everyone to be an independent trader, that they're able to come up with their own signals, and they're able to analyze on their own. So yeah, so please guys, please feel free, please feel free to share your own question. Maybe you've got a pair that you are trading. This is the time you can like ask questions. Okay. Yeah, can ask any question. I think we've been observing gold for now. I think I just got a question from I think the person was asking was Ayanda. Yeah, Ayanda. So I was asking whether what's going on with Nasdaq, and then I just told him, no, man, we are basically it's the 4th of July. So since the 4th of July, you notice that almost all the indices that are US based, obviously, you've got the early market close. Okay, so we've got an early market close, so you not see much movement on it. Even if you're in profit or in the loss, obviously you can't see any movement. You can't open or close any of those trades. So please be aware about that. I think that's the reason why I was like, no, today you're not gonna see much volatility in terms of the movement, but you get some movement. Okay, I want to take some questions, because I feel like the first session I was just rolling, rolling, and rolling, and this session, obviously, let's do some questions. All right. Question. Kilulama is good. Connected. Welcome back. Yeah, that's good. Yeah, so we talk about confluence. So confluence is basically having different signals that are showing you this is a good place for you to enter a buy trade. Okay, let me just mute. Okay. What you can do is you can unmute yourself if you've got a question, and then yeah, allow you. If you've got a question, you can unmute yourself. Then you can answer. You can give that question. Maybe for a pair, you can go and check it out, and then yeah, that's it. Okay, when you talk about, let me just do this. I'm gonna make sure that we are on the same page. Okay, yeah. So we talk about break above a level, just changes. I always like changing my chart into a line chart. So you can see the market broke above this level 1, 2. Okay, broke above that level from this. See, and then what had happened that it made this compression coming back. This compression means it's a take profit from this bullish movement here, then coming back and then went, up there. And you can see even this, if you can compare this move this here coming back, this move from there to there is more. If this is 200 pips, chances that this is also 200 pips. So you can see even this pullback. If you can use what we call the Fibonacci, we're talking from this low, you know. I'm just waiting for question, by the way. If you've got a question, this is the time you can ask a question, especially regarding what we have discussed so far, especially in the beginning of the session, okay? So I'm just gonna check that. Okay, Fibonacci, from this level to that high. So let's just remove everything, move and this also. Okay. So from the Fibonacci, what are we looking for? In the pullback, we're looking for a zone of 50 and 60. Okay, this is the zone we are looking for. The 50 and the 60 zone. Okay, where we are looking to buy again. Okay, you can see the market made the pullback and in the zone of 50 and 60. And okay, made. Okay, in that this is basically our zone here between 50 and 60. You can see the market from there, from that drop, and that drop is in line also with that candlestick pattern on the side. Okay, we'll talk about that some other time because this pullback. Okay, let me just admit, seems like some guys are having a problem. I think Tola just mentioned to me that he got a problem with loading on his side. So from this level, this is 50 and 60. This is where we are looking for. So this 50 and 60 level, it's another confluence. So right here is where we're going to have our buy entry. Okay. So confluence is different signals that are showing you that this is the right time to buy. So buy entry. It's not an entry because you see that the market is in a demand zone. We look for confluence. Okay. Of triggers, or we can call them signals. Okay, so we've mentioned the chart pattern, which was a doji, this one. We've mentioned also, if you can go to the smaller time frame, you can see this is also a W. Okay, a W. W is equal to double bottom. Okay, that's a W. Okay, that's a double bottom. So it is the sum of the confluence. Another confluence is it's a pullback by compression. A pullback by compression it means this is a take profit movement by the institutions, and it also means they're basically building liquidity. So this here, if you don't understand, compression is this movement right here. It's not an aggressive move like this movement here. It's just this movement here. This pullback. Down, up, down, but it's a form of compression. We call it compression, building of liquidity. And it also, this pullback, it means it's building, it's coming back, and also came back right to our level of 50 and 60. Level of 50 and 60 of the Fibonacci is where we normally will have our entry. And even this level, what should you see? A W bottom, a W, which is a double bottom. Okay, these are some of the confluence of triggers, some of the things that are signifying that are giving us a buy signal, and also a doji, which is a chart pattern. Yeah. Okay. Got a question at the bottom. Will you not? Where will you place your Fibo? At the bottom, will you not drag Fibo? Okay. What I do with the Fibo, remember, we look at the high and the low. Okay. So let me just remove everything so that we can just talk about it. Yeah. Yeah. Okay. Whoa. Okay. Okay, so this is the chart we're looking at. Okay, we're saying the market from here made a reversal. What's the original? Where is the starting point of this move? So I normally like to change this into candlestick like this, from candlesticks to line charts. Okay, so I can see clear. So from here, right, then this is the low. Okay, so I'll take this as my low. Write it down. So that's my low. Okay, and then I take that as my high. So that's my high. That's my high. So what you do is, since this is an uptrend, what do? You do F. So an uptrend, in an uptrend, this uptrend with Fibo, think okay, in the FIBO, in the uptrend, you pull up. Okay, that's what you do. In an uptrend, you pull the FIBO up. Okay. Okay. Yeah. So you pull the FIBO up. So this is our low. This is our high. Okay. We just mark it by price action. Okay. So that's why I had to switch from the candlesticks to a line chart, because that's gonna show me a much clear movement using line charts. Then I can switch to candlesticks, so I can see my confirmation and all of the details. Okay. So now what I do is I pull the FIBO. Okay, from here, from this low, okay, to this high. Okay, from this low to this high, and then this is where we saw a reaction. Okay, but what I want to do with my FIBO, I want to mark what? The 50 and the 60, especially since I'm also looking into entering more trades that are for buying entries, since there was this pullback. Okay, this here, this is a behavior for the price, which is what? This is what we call compression. Okay, like a spring. That's what the spring does. It's compressing the price before. That's what before. What you do is the spring, you compress it, and then once you compress it, then you're gonna see this huge movement. It's like a bouncing of a tennis ball. So this huge movement going up, and then from this bullish movement, another bullish movement, and then another pullback. Can you see another pullback coming back again to this level? Then okay. But otherwise, let's just switch this back to candlesticks. Okay, can you see back to candlesticks between 50 and 60? Yeah, between 50 and 60. This is the level we are looking at. Okay, yeah. Yeah, that's the level we're looking at. Yeah. Okay, that's the level looking at this level here. That's our area of interest. Okay. Yeah. Is that clear? You sorted some of the question. I think Lulam was asking that question. Are you clear about the question? Yeah. Okay. So we said confluence. So this is your low. And even your low, you can see this also gave us some sort of this is a double mirror. Okay, it's a nice candlestick pattern. I like it. And even that segment over there is very nice entry, coming back, then yeah. Okay, perfect. All right, okay. That's good. That's good. So we're saying confluence, confluence, chances are what normally will do is what normally helps also if you're looking for a good, very good setup is you just switch back to yeah. What normally helps is if you're looking at the higher time frame, you're looking for what? Direction. Okay. It helps also to mark, because for example here, the target of this pair, you're like, what? It helps also to mark higher time frame because in terms of direction. Okay. Higher time frame in terms of direction, and then you go on a smaller time frame for entrance. Okay, let me just write that down because it's very much important in your entry. So you make this as part of your analysis rules in terms of your training plan. Okay. So what you do is okay, say higher time frame, I'm gonna say HT is for a direction, and then a lower time frame. Oops, lower time frame is equal to our entries. So you wanna have your sniper entries on a smaller time frame, okay? And also in a smaller time frame, what you want to do is So higher time frame, again, SG is equal to higher time frame. This is where you take profits. Okay, higher time frame, you look for your take profits, and then in your slower time frame is where you mark your stop loss. Okay, it helps when you have okay, smaller time frame. Okay, I think I wrote it wrong. Smaller time frame, you're looking for your stop loss. Because in a smaller time frame, it's where like if you got this gonna help you in terms of what? Why are we doing this? Because you want to have when you talk about this take profits is your reward. Okay, is equal to your reward. If you're making profits, that's basically your reward. And if you are talking about a stop loss, is how much you are gonna be taking a risking per trade. Okay, so stop loss is equal to risk, per trade. Okay, you're gonna do some calculation. I've got an ebook. We've got like a chapter in one of my ebook where they talk about this. But I'm just doing it because I want to do like this so we can get a bit of understanding of it. Okay. So higher time frame, you're looking for what? Direction, okay? A higher time frame also for your take profits. Okay, that is for higher time frame. Direction also, and then this is smaller time frame entry, and take profit is what? Is your reward. Smaller time frame, you're also looking for a stop loss. Your stop loss is your risk per trade. This is your take profits, how much you're going to be making per trade. Okay, let's look at the higher time frame of gold. Okay, gold went from here. We cannot see this level. The only way we can see this level is by on the higher time frame. Go to the daily. Okay, I hope you are noting this down because it's very much important for you to understand this part here. Okay, so now even on H4, which is 4-hour candles, you can see that the market is actually pushing for that level. Why I'm saying that is because of this here. Okay, these points. See this here. If you do this, see these pins. Okay, I'm gonna show you what I mean so we can be on the same page. Okay, see these pins here. Move this. So you can just highlight them by horizontal. These pins and these pins and these pins. Okay, yeah. 1, 2, can see same level. Okay, above that level you've got that and get a huge drop. So this is a very nice level of what? Supply, because there was a huge drop after it. Okay, so and then yeah. Okay, pin, drop, pin, drop. Okay, come back again, pin, drop, double pin, drop, 1, 2, pin, drop. Remember, you've got a lot of people that are putting their stop losses above here. And then besides the stop losses, what also you have here, you also have a building up of pending orders. What are those pending orders? That is your people that I call them breakout traders. Okay, so you've got a breakout traders, which are basically looking at buy stops. Okay, so this is basically liquidity that is building up. Liquidity is building up here. Okay, it's building up here. Okay, what else do you have here? You've got your stop losses, okay, that are building up here. The stop losses is people that are stop losses of what? Of people that are on sell trades. And this stop losses is part of your liquidity. When you say liquidity, you're talking about money. We talk about money. Stop losses here, right? Okay, let me just remove this also here so you can make sense. So this is what is happening in this zone here. This zone, which is if the market can go above that level, it will hit number one, these breakout traders will activate their buy stops, meaning they're gonna be in the buy trades. Number two, it will hit the stop losses that are in between here. Remember, this is $1 trillion market. People all over the world are trading it. Okay, let me just remove that so you can see this zone. Okay, so now what do we have? This pin, touch and drop, coming back, touch and drop, double touch and drop, touch and drop. And now we've got this touch here. Okay, and then that one over there, and then a teaser right here. Okay, chances are this market, what it can do, looking at it, what it can do, it can come back to this level. So I'm looking at the setup now because we need to do some analysis. It can come back here because that is basically our bullish engulfing. Can come back here, because let's just do some analysis. Okay, let's call this R1. Okay, call this R1, resistance 1. Okay, then let's call this resistance number 2. Okay, resistance number 2. Remember, you want to buy low, so the price before you buy it, let it go lower. Okay, so and let it also be on the buy zone. Okay, that so that is basically what I'm looking at. So the market goes here to the 1946. Chances are it can go to 50, okay, because they wanna use like not proper numbers. It can go to level of that. This is the last bullish movement before the drop. Let's use this candle. So it drop, then let's do this. Yeah. Okay. I hope this is clear. So this is a signal. Okay. This is like what I call a setup. So expecting the price from this movement to come back on this level here because it's an opening here. Touch this. So what I'm looking for a nice, before I buy, it'd be nice to get a W, okay? It'd be nice to get a W, okay? Which is the first signal. Number two, this is what? A demand zone, okay? So it's nice for price to go back to the demand zone, okay? Demand zone, okay? Okay, demand zone. So I'm talking about what? A W. I'm talking about a demand zone. Number two, it would be nice if when the price reached that level, maybe I see a doji. Okay. If I see a doji, it'd be nice if I see that kind of a price action. Okay. It'd be very lovely. And also, if you can see this level, you can see even this level here that we've marked. It's a very nice liquidity zone, because you can see the price broke above, coming back, and then made those movement opening high and then it drop, and it would be nice for it to actually come back even in these levels. A very nice bullish setup if it comes back here. Be a very nice setup, very lovely. Okay, and also because There's also R1, R2. So this is some sort of a fake cards here. So it'd be nice for it to go back and then drop. Okay. I'm not sure if that's making sense. Are you guys good? You guys still good? Yeah. I don't want to do what I call it information overload. I really don't like. So entry signal, set profit target, determining risk and reward ratio. I think we're gonna do that next time. So next time when we're covering this session, we're also gonna talk about this here. So we will talk about this. Okay, I think we'll talk about this. Talk about this here. We'll talk about this. The micro lot. What is a micro lot? Mini lot, a half standard lot. And we'll also talk about the standard lot if you are trading this and how many of that and how much dollar per pip you are making. And how do you use that in your trading plan? And how do you calculate what lot size to use? Nope, it's not clear. Okay. Okay, and I think for one delay, I understand because it's a first session and it's a bit of an advance. Yeah, it's a bit of both, bit of an advance and also a bit of for beginners also. Yeah, one delay. I think yeah, we do another session like a one-on-one session just to explain everything on your side. See any question? Oh, see? Okay, perfect. Okay. One did say not clear. Okay. Okay. Mutual science. Okay. So this we're gonna talk about the micro lot, how to calculate a lot size depending on the trading account. So perhaps it would be nice if on the next session, what we can do is everyone can just, if you do not have like a live account, you can have a demo account and just tell me the balance in your trading account and the balance in your live account. We can talk about a small account, a big account, that's totally fine. Because what you want to do is we want to do some calculation on our next session in terms of what lot size to use. And based on the lot size, we'll also cover. So we'll talk about lot sizes, and then we'll also talk about how many trades, if you are trading in that account, how many trades are you gonna trade if you are risking maybe 2%, If you are trading, let's say for example, you just go down to the lot sizes, a micro lot, okay, you're getting 10 cents per pip, okay? If you're trading 0.01 on the 1,000 Rand account, if you're making 100 Rand per trade and your stop loss was 30 Rand, and how much you need to make about 30% growth in your account, 10% of your account, mini lot 0.10. If you're trading a $300 account, we talk about that in our next session. Okay. Yes, this will be recorded. It's also going to be on YouTube. Yeah, so it's going to be on YouTube. And then, so like I keep saying, and then we talk about the half standard lot. If you are trading, you're getting a $5. So if you make 100 pips, you're making $500. 0.10, 100 pips, it's about $100. And then if you're talking about, obviously remember, you can, so a one standard lot is about $10 per pip. So remember, you can open up an account using any currency. You're not limited to using a rand or a dollar or a pound. You can use any currency you are comfortable on. It's just a matter of converting, just a matter of converting from your currency you are trading at to that currency. You can see, today not much movement. It's a holiday. So it's the 4th of July. You not see much movement, you know. Yeah, not much movement. I was expecting, obviously, my expectation was that the Nasdaq is gonna come back to this level, but no movement, It was a bullish move. Remember, after such a bullish movement, that's bullish movement, right? That's bullish movement. The market should do this, you know, because a building up of orders, building orders, If a lot of people have been buying your products, expect that the people that have been buying it, chances are they might tell people it's gonna be a bit quiet, but after some time it's gonna pick up once again. You can see picking up once again. But after picking up again, it's gonna be the pullback. That pullback expects a quick pullback to come back, but it's gonna come back obviously to these levels. Can you see those levels? But before you don't just buy also on those levels, you wait for a confirmation. Confirmation, your confluence. Confluence, not just one, two or three are very much important. And then what else? I think USP 500, not much movement again. I think DEX, let's see. Yeah, DEX, yeah, most definitely, because I think I did mention that there was a chaos that is going on in Paris, in France. If that's the word. Also, remember, this is also another level of what? Demand. Let's go higher time frame to check it out. You can see even this here is a setup. Okay, this here is a nice setup. That's why I see that reaction, and I do expect another reaction in this level again. That reaction obviously should be pushing it up. And then let's just come back here. So pushing up to that level, because you can see the candlestick pattern, which is this here. Okay. It's not aggressive moves, and you can see another candlestick pattern. So this candlestick pattern here is a clue. This here, small as it is, small as it is, this bullish, this bullish hammer as a candlestick pattern that shows after this movement, there were some orders for buy. 1, 2, 3. This very aggressive buy. And then you saw this. This is a market or bankers taking profits, and then reacting on that level, then they pull back. Pull back to the same level as this. Because they want to place their buy almost in a similar price, it's like if you bought something at 100 rand, the next time you want to buy it, you want to buy it at that price. You don't want to buy it like maybe it's 200 to 150. You want to buy at a similar price because the institution, they've got that ability, of moving the market. So they always want to buy at a similar price. So that's why if you saw this bullish movement right here, it's going to come back almost to the similar level. Then hence you see another order in that level once again. Okay. That's why they're always going to test level. And you can see after this drop, and then this here was a break from that level, which is marked here and also marked here. So always look left. You can see. And then this candle here, which is the Doge and also inverted hammer or shooting star, and more drops happen. So chances are, if it goes up, it's going to react to that candle over there. Expecting to react on that level, which is that candle pattern, and also expecting a reaction here. Yeah, that is all for tonight. I will upload the 2 sessions. You can check it out on YouTube. But remember, you can definitely ask me on WhatsApp, and you can watch the video, watch them over and over again. And remember, always feel free to ask questions on my WhatsApp number. Yeah, I think that is all for now. I think we can close it here. It's been a very long night, that I can say. It's been a very long night. And these are some of my contacts. That's my number for WhatsApp, for calls, Twitter, email address, presidentwonga@gmail.com. Instagram is surprisewonga that's Twitter. That's calls. That's what email. Yeah. Let's close it here. Yeah. You're most welcome. Very much happy. Very late. Yo. But you know what? We are committed to this. We wanna win. We wanna be on the B's and I's, which means business owners and investors. So that's definitely it. Have a good night, and yeah, thanks guys for joining in. It's been wonderful. Yeah. 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 Okay. Cool.